Have an idea?
FATCA?
Yeah, in caps.
Where at?
9-2.
I'm sorry, what was that?
9-2.
Uh-huh.
Oh, sorry.
And where are you looking at?
I forgot. I saw it.
Oh, for the filing requirement, as far as that's for foreign income.
Oh, yeah.
Yeah, that's a foreign income.
Okay.
Okay. All right, so Chapter 9, like I said, retirement plans, pensions, annuities, Social Security. The big thing is always complete your main info page. If you don't have that birth date in there, nothing's going to work right because we have magic birthdays. Once we've turned 21 and we're legal to do everything that we want to do, our next big birthday is 59 and a half. Okay? All right, you don't even have to wait till the 60s. Just got to get to 59 and a half so we can start taking money out of our retirement. All right, and then from there, I suppose retirement age and 65 for Medicare are fun too, but tax-wise, the next one's 70 and a half. That's when you got to start taking money out. Required minimum distributions. All right. Make sure that when you're putting those in the computer, know the tax law for the state side, that you check box 1 for 59 and a half, that you check box 2 if it's a government pension. I put that in that little cheat sheet thing I just handed out there. It's in there. It talks about the boxes. So I figured that was a good summary because it really doesn't cover it. Covers it a little bit in the New York State considerations, but that has a little bit more of a little bit more flavor to the software, and so that you know that it carries over. It's the page. Looks like that guy. Okay, that has that one up. That one on there. It says boxes on 1099-R. Box 3, reserve for future use. Maybe you'll check it to say that you'd like to submit your return on a postcard. And 4 is if you have railroad retirement, okay? But making sure that you have those, and then always making sure that they flow over. And to flow over for those exemptions for the 59 and a half, because on the state, the Social Security is always all tax-free. New York State, local, and federal government pensions are always tax-free, no matter the income. Other retirement accounts that would be taxable on the federal, you each get, or each person gets a $20,000 exclusion. So the first 20. So you always have to make sure that those 1099-Rs, that the first thing you do is check the box, especially if it's married filing joint, check taxpayer, check spouse, because you don't get to share the 20,000 with somebody else. All right, it's 20,000 each. All right, and remember, 59 and a half, just because you turn 59 and a half in that year does not mean you get the entire amount. A couple things will happen. Either they don't do it, or the distribution entirely happen as a lump sum after 59 and a half, or sometimes the retirement things, if somebody's got to retire at 55, they'll get one statement that'll have a code 2 and one code 7. Well, that means that the code 2 was an exception to the penalty, but it's not tax-free on New York. Okay? All right, does that make sense? So you got to make sure, because you got to kind of prorate it. So I don't know why they, and everybody always asks me, I have no idea why they picked 59 and a half and just didn't do a round number, but that's what they decided to do. So somewhere along the line, the back room, they said, well, I like 60, I like 59, well, we'll meet in the middle. But like I said, if you turn 59 and a half in a year and you turn 59 and a half in April, that means January, February, and March, you do not get that exemption on the state. So you have to add it back into your income. okay? Because the software will not prorate it for you. You have to do that on the New York State and take a look at it. Make sure you get the right number for the subtraction. We talked a little bit about that 414H SUB that I've been telling you to delete to this point. All right, that is that state pension people contribute to. It is treated like a traditional IRA on the federal, but it is like a Roth IRA on the state. All right, so you're paying tax on the way in. All right, okay. So it is excluded from income on the federal, and it is part of income on the state. Now, the nice thing about it, if you put $1,000 in there and it turns into $10,000 from the state, you get that $10,000 tax-free when you go to take it out. So, kind of a good deal, huh? Yes. I'm just recapping stuff.
Okay, so what was this about the 10,000? That's excluded from federal, included in state.
It's not a fixed number. I just threw a number out there. I'm just saying that when you have that 414H SUB, it's tax-free on the federal, but it's included, it's part of taxable income on the state. It's treated differently. Okay?
Does that automatically go in like that? Or do we have to?
As far as automatically,
Once we enter that in, it would automatically go on its state as the income?
as long as we code it correctly. Make sure that you code it 414H SUB. If you just put 414H, it won't carry over to the state. It's that, and that's that backwards, because it's an addition, but it's coded in the letters as a subtraction, which makes no sense, but apparently they didn't want to put the words ADD on the end of it. So, all right. Let's see. Any questions on the problems from Chapter 9? Would you like the answers? All right. We did Elmer. Who was it? Elmer and what was her?
Elizabeth.
Elmer and Elizabeth. Yes, we did Elmer and Elizabeth in class. And we got federal refund 311 and the state refund 601. What'd you get?
I got the old 16.
Okay. Did you remember to check your 59.5 boxes?
No, I don't know.
Okay. Usually when, and just for kind of a point of reference, if a retiree owes money to the state, the first light that you'll go off is, did I get the 59.5 rule checked on the 1099Rs? Okay? Because most, you know, when you think about all that exclusions, 20,000 and state and Social Security and all that stuff, chances are they're going to have very little taxable income, if any. Okay. Yeah, so check those boxes, Jim, on the 1099Rs. Make sure you check box 1. All right. Second problem was Ralph and Bernice. Here's another name. Elmer, you don't hear often. You don't hear Bernice much anymore, do you? That's a good name. I think I have a relative named Bernice. The Donalds, federal refund 144, state refund 145. Okay, is that the railroad one?
I got the Fed. I didn't get the
Oh, I know, I didn't put that one in, that bottom one, I wrote it down, didn't put this in yet, I wasn't sure.
Okay, so we'll do that one because I want to do a railroad one for you, okay? So we'll come back. And Stan and Jennifer Wright. Okay. And theirs was pretty straightforward. They threw some capital gains back at you there. But the Wrights, Federal refund $31.20. State refund $13.13. We good on that one? Okay.
She's in trouble. She works for Sears Roebuck. So,
All right. The federal refund was $31.20, and the state was $13.13. Okay, so let's take a look and let's go through because everybody's going, I don't know about this whole railroad thing. Okay, so we'll take a look at the railroad. Okay, so we'll get this in here real quick. Was everybody high or low on the state? Sound like everybody got the federal okay?
What's close to the federal?
You were close?
I'm okay on the federal. And
What's the old proverb? Close counts and horseshoes and hand grenades?
Yep.
I suppose close could count on tax returns as long as it's in the favor of the taxpayer.
Oh, I think this one was, so.
Okay. All
They don't
right.
want to do better than you.
And Brookfield Lane. All right. Okay. And we'll just put the cell number in there. Okay. And again, the importance of the date of birth.
I put hers in and I took hers out because they've been separated since 2006.
Who's that?
Bernice. They're separated since 2006.
Okay.
So I took hers back out. I wasn't sure.
Okay. Well, we're gonna put her in there. So let's look at the bullet points.
Okay.
Ralph filed a 1040 last year. He did not get a state refund. He'd like to handle everything electronically. If he owes, he would like it withdrawn from his checking account on April 1st, 2017. Use the information sheet in the Shorehams 17. Ralph and Bernice have been separated. They have not lived together since the separation, but they are not divorced. Bernice has already filed her tax return and takes a standard deduction. Ralph retired from the railroad on June 4th, 2012. He was 65 when he started receiving his retirement. He received benefits for all of 2017. He has not chosen the joint or survivor option for his annuity. He also has a part-time job, and we have his W-2, and he had health insurance. So, how are they filing?
I said married filing separate.
separately.
Yep, married filing
So
separate.
that's why I didn't put her on the main one of spouse.
Yep, so we can take her out of there.
Oh, do we?
So this is just going to be married filing separate, but we do have to put her in there so that we know who the other side, and I'll explain why in just a second. It kind of ties in a little bit more with what we're going to talk today about itemized. Okay. All right.
Was the state that asked how much she made last year?
Mm-hmm.
That information?
Yeah, we don't really have that, so we don't have to worry about that part of it. And I'll explain why in just a second too on that one. So I did another gentleman yesterday that came in, said he needed 5 years, and we discovered he needed to file 8 years on the state and 4 years on the federal. Had no W-2s, no idea what money he made. I got my frequent flyer miles with the IRS yesterday, so.
In that case, can you call the IRS and have them give you the information?
Yep, I was able to get the transcripts. The only thing that's a pain is the IRS has decided to stop putting all of the information. They give you the last four, the EIN number, and then the first four of every line that has to do with name or address. So I feel like I'm playing Wheel of Fortune and I need to buy a vowel to try to figure out where the guy worked because he didn't remember. And it was even more fun trying to find the EIN number to do the filing. So we have a nice database of most of them, but
And you know, you didn't know how much you made, you didn't even know where you were.
pretty much, actually, believe it or not, I know the gentleman through the indirectly, but in 2008, he contracted H1N1 and ended up in the hospital and was in a coma for 2 years. And he had a fiance and she was trying to take care of things and figured cleaning things up. She closed a business of his. And the reason for all these returns was the state was after him for sales tax in the tune of $108,000 in sales tax with interest and penalties.
While he's in a coma.
And it wasn't even his business because right before he got sick, he actually dissolved the business relationship. And so it was not his responsibility, but the partners that he had, knowing that he was incapacitated, threw him right under the bus and backed over him several times while he was in the coma. And so $108,000 later, we're trying to fix everything for him. He agreed, and we got it to that he paid $1,000.
$1,000.
Yeah, which was a lot better than 108. So
Is he healthy now?
he is. So, but yeah, so he had, and it never came up to come to think of it. Never came up if he still has the fiance. I know he's not married because we did all the returns single, but I wouldn't think he'd still be engaged after what, 9 years? It's a long-term engagement, right? Yeah. But it didn't sound like he's actually tied the knot yet, so.
That's so good. He came out of it.
All right, so we have craft tool and die. All right, and didn't make much. I'm taking that 414 HSUB out of there. We have,
Why did you say that?
it just defaults on the software, the usual software. All right, we had that. And withholding looks pretty good. We have a 1099-R for him from Murphy Bank. All right. That's for him. And okay, so we have that. And again, that was from Murphy Bank. And One Murphy Center, wherever that is. I'm going to say it's in in Amherst. We have $982. Nothing on this withholding. It was coded 7, which means it's a normal distribution, and was, how old is Ralph? Ralph's plenty old. Okay. All right.
Already received.
Okay.
Okay.
Yep.
And what's that for?
59 and a half. Yeah, that's a little thing I gave you that's not really in the textbook. It's kind of a little bit in the New York, but that's why I gave you these handouts, Jim, because that's anytime you have pension, you got to make sure you check those boxes.
Is that the one that you're looking at, the FATC?
That's what I asked. you, what the-
Okay, that's right above those boxes.
Yeah, but it goes with the stuff up there, so it talks about some foreign and,
Okay, so it is the foreign stuff.
yeah, don't worry about that one, so. If you get a foreign pension one, call me, because I'd like to know how you did it. All right. Okay, so last part we have is 912. This is the one that we talk about is the railroad. As I said, pink and blue, boys and girls together. So the pink and blue, pink is from the Social Security, blue is from this railroad. So the first one, if you take a look at your little cheat sheet, the one that says railroad tier, blue section that I gave you. As you can see, the boxes around, really only 3 boxes are important there for us. Okay. All right. All right, so this one is going to go right to Social Security. So as it says, it's going to go on line 20A. That's our Social Security line. So we're going to go to that, 20A, and we're going to open up a worksheet for Social Security. All right, and right there it says Railroad Tier 1 received this year. Well, it says right there in box 5, Social Security equivalent benefit portion of Tier 1 paid in the year shown above. Well, his says 2000XX. So we'll make the assumption that this is 2017. So we put 14121 there, okay? He had 11 is the equivalent to the Medicare premium that he paid. And box 10 shows $150 in federal withholding, okay?
Wait a minute.
So I'm on,
I think I'm on the.
Yeah, so you go to
Because I
Social
was
Security.
okay? So we go to line 20A for Social Security,
On the 1041, page 1?
1040 page 1, line 20A.
I mean, I have my benefits there, but I didn't do it on that form.
Pink and blue. Where do we say the pink boxes go?
Right, I had the Social Security one, but my Social Security. Oh, no, I have one.
Okay. All right, everybody find that? And like I said, that little cheat sheet that I gave you, we're only worried about box 5, 10, and 11, just like we would be on Social Security. So off of the little statement in your workbook on page 912, the top one is the blue for Social Security. Okay? All right.
So if it was pink, it would also be a Social Security.
If it was pink, yes, because pink is the regular Social Security statement. Yeah, I wish our books were in color right now. It's the lighter shades of gray. Okay.
So wait, what is pink? That's number 5 is going to be pink?
No.
10 and 11?
Social Security statements are pink.
Okay.
Railroad statements that are treated as Social Security are blue. Pink and blue go together, boys and girls. Okay? All right. We have now the bottom statement is the Railroad Tier 2. Okay? So this is treated, as I say, green, show me the money. So we're going to go to our 1040 page 1. And we're going to go in, and this is going to go on a 1099-R. Okay? So any one of the boxes on 15A, 15B, 16, just to get a 1099-R, however you want to get your 1099-R. Okay? So we get that 1099-R.
This part's being treated like it's an IRA. You said
Yes.
15A?
Yep. Okay. Now, so the green section, the green one, and again, I apologize, they're not, it says green in your book.
Yeah.
Okay. All right. Okay. So if you go in your handout, there's one that says, the next page over says green retirement tier 2. So it says green section. And you can see that we got 3, 7, 9, and 12 that are squared with, are highlighted with boxes. Okay? And you might have to flip back and forth between that page and the next one, because the next one has a little thing that says, where does it go? Okay? So, if you flip over on the next page, it says pensions and annuities, RRB 1099R, which is the green one. Okay? So this little box right here. All right. Okay? So on that one, what's it say in the first thing? We got box 3. Okay? So we look at our box 3 on here. What does it say? Employee contributions. Oops. I need to scroll up a little bit.
Or this one says capital gain on it. We don't care.
On which one?
On your box 3 there, it says capital gain.
But we're going to, under the railroad statement, this is the green side. We're putting it on a 1099R. It says 9B, employee contributions. So if I look at my statement, my green statement, what's it say in box 3?
10,397.
10,397.
Yep, it says employee contributions, so that gets transferred there. Okay, so put that number in there. What's it say next? Ignore boxes 4, 5, and 6. So that means on your little statement, your banks or your retirement statement in the workbook, 912, the green one, you get to ignore box 4, 5, and 6. So even though there's a number in 4, we're not going to use it. Okay? Next thing it says is what? Box 7, total gross paid, where does that go? Box 1. So box 7 goes up. And what's it actually say in parentheses? RRB line 7. Okay? All right. Okay.
You got that number now, why is it still show as red?
Red for the taxable amount.
No, just in box 1, when they hit 95.57. Why is all that red?
Where it says the taxable amount number 2?
No,
Oh,
it's got,
there. Oh, you didn't put it on your stuff?
Is number 1.
yeah, so take United States, yeah, just remove that and start a new one. For some reason, you got an extra thing, so just remove that form. Yep.
Oh.
And then just, yeah.
So this is IRA.
Yeah.
As far as going back to.
Yeah, or the other thing you can do, if you want to, is pop that one open. This other one, this other 1099R, and then just hit copy at the top. There you go. So check that, and check your box.
Ignore that box.
Do you know what it means?
Okay, and then right here.
Don't care what that's.
Okay. Put it up there, ID number in there. Okay, so like I said, on the sheet here, it kind of lines up. So we got box 3, goes to 9B, we ignore 4, 5, and 6. And when it's talking about RRB, it's talking about the little green one that's on here, okay? So let me get those numbers in. So we have, $844. Okay, so we've done box 3, goes in our contributions, which is 9B. Okay, we have our box 7 goes into the 1099R box 1. Okay, and don't put anything in the taxable amount. Okay, goes down to box 8. If not blank, out of scope. Okay, so don't worry about that. Box 9 on the green railroad form shows tax withheld, and that goes in our box 4. In this case, it was $250. Okay. All right. Ignore boxes 10 and 11. Okay. All right. Box 12, Medicare premium total. All right. And we won't worry about that because we took care of that on the other side. All right. Leave box 7 code blank and get F3. Remember, F3 gets the red out. So go to your code box 7 and hit F3. Okay. All right. So what's that leave us in red? Taxable amount. Okay. This is where we're going to use our simplified method. All right. And we did a little bit of this on the exercise, some of the problems. So if I go down to the bottom, see my simplified method? Okay. If I go there, what's it say there on line 1? Cost in the plan at the annuity start date, and then what's it say?
Line 3.
Okay. What does line 3 say? Okay. All right. And then what did it say in our bullet points? Yep, he was 65. Yep. So on line 1, we're going to put what's in box 3. So we, like we said, we're putting 1039725. It said he was 65 when he started, and he's not doing the joint on it. And he received it all 12 months. Okay. So what did that just do to his taxable amount? What's the remaining? What's it say at the very bottom? Okay. That's his taxable amount.
Why can't I get that?
What's that?
I don't get that.
And we don't have to put a code in, so we're supposed to undo that red? Let me undo the red.
How come my exclusion per month doesn't want the same as yours?
Yeah,
The same
neither
numbers
mine.
in-
What's that?
The exclusion per month comes out different, we got the same numbers. Huh?
Yeah, mine does
Did
too.
you check?
4332?
Ours comes out $39.99.
I'm starting getting.
I have 4332. I think I just undid some of mine. Oh,
Is yours $39.99, Kevin?
0.25. 4332.
Now, the other box I checked was this check that the annuity starting date is after 11/18/1996.
Yeah, don't check that one.
Check that one.
Nope.
Why not?
Just check the age. The only one you want to check is the age.
Why don't you want to check that one? I told you when it was.
Is it an annuity?
But you don't check that.
Well, okay, that changes.
Yep. So you just want to check the 61 to 65 box.
How do you know you don't check that?
Just don't check it. Never check it. Because it calculates wrong. I don't know why it's in there.
You
Right.
don't care when they start.
No. Okay. So only check the age box. Okay. All right. So what's everybody got for their federal and their state now?
I'm almost up, because I started to do the one. I didn't do it right now, I'm doing another one, so now I,
We'll remove the bad one.
Because now, before I had the federal, but not the state, now I got the state at 145. My federal says 394. Which is 200.
Okay.
The federal is 144, but the state is 546.
Okay, well, let's go through line through line here, okay? So go to your 1040 page 1. All right. And on 1040 page 1, line 7 should read 12,475.
Wait a minute, wait a minute. What do we?
I'm sorry, what's that? 1040 page 1, okay? 15B should read 982. Okay. 16B should read 9037.
What's 16A?
9557. All right. Okay. We have Social Security on 20A, 14,121. And on B, 2278. Okay. So 22 should read 24,772, as well should 37. All right. Come up to the top. Okay. This is where we're going to talk about some of the differences we were talking about earlier. Okay. On line 39, B, what does it say? If you are married filing separate and your spouse itemizes deductions, or you're a dual status alien, check here, or F3. Yeah, so check it, kind of uncheck it and hit F3 because you do not want to check that box. If I check that box, what does his itemized deductions go to? Or his deductions?
Sure.
Well, he gets to the $700 he had in withholding. So, but yes, he starts at 0. So this is one of those penalties, and we'll talk about when we do itemized deductions today. But this is one of those penalties when you do married filing separate. If one does, the other does. That's why they gave you that information. If one itemizes, the other must itemize on married filing separate. So if one itemizes and they get to take the house and the property taxes and the charitable, guess what happens to the other one? They start at 0. They don't even get the standard. So his deductions right now goes to 700, but we're going to uncheck his box because she did not itemize. She took the standard. Okay. All right.
Okay, so we leave that blank.
Yep.
39B.
So his deduction there should be 76. Okay.
All right, how do you get the box not to be red?
Okay. So if in there, if it's red, check the box, uncheck it, and then hit F3. F3. Okay. All right. So that makes line 47, 1503. Everybody got that for the tax? Okay.
No, mine's all messed up. Go ahead and redo it.
All right. And his tax withheld should be 1647. Okay.
Oh, I got 1897.
64, 1647.
1647. We have 1247 on his federal tax, on the W-2, I'm sorry. He did not have anything withheld from Murphy. And he had $250 withheld from his 1099 RRB. And then he also, on his Social Security, had $150 tax withheld. So on that 1040 worksheet 1, did you get the 150 tax withheld? Did everybody get the 1647?
No, I'm got 18. I got 250 over the 18.
Okay, so let's see.
That's what I was off by on the return too. So I don't know.
So let's go to your W-2. That's good, 1247. Go to your 1099-R for Murphy. There you go. That one's good, no tax withheld, okay. Go to that one. 250, that's good. Okay, now go up to your worksheet 1, 1040 worksheet 1. So we got that one good. So now go to your 1040 page 2. Where did you get the extra from? Oh, right there. You don't have to put that in there. Then you did the withholding twice. There you go. Perfect. Yeah, that one says enter the federal withholding from 1099s.
Yeah.
That's if you did not enter it on the 1099-R.
On
So
the-
don't do that on that.
On
Don't
199R, you didn't put a 7 code of any kind, right? On number 7?
for the railroad one.
For the railroad.
Nope, F3. I just got the red out.
So that will help take care of them.
Mhm.
But I deleted the one. I think I put it in wrong.
Yeah, so that 1099.
One railroad one.
When you put it, the federal withholding, the 250 on there, you don't have to put it on that other one. That's kind of for special circumstances. And when we do some of the withholding for the tax part of it, in chapter 17, I think it is, we'll talk about that.
So I deleted one now.
You got it.
Yeah. This one I have right. This one's on, this one, yeah, which was fine, we don't have a tax on it. But I'm trying to figure out where I put that now. And I have a worksheet here. Worksheet
One, yeah.
1.
There it is right there. Yep, remember pink and blue, boys and girls together,
That's right.
right?
Okay.
Now, let's see, we got
That's-
extra withholding on the state. Okay, so let's go to our state. And let's see here, go to page 4 of your state.
There's something really. Why it's so good.
Okay, let's go to that one first, see what we got.
That's what I did.
Yeah. No, I don't think, Jim's did that too, I'm not sure what, oh, Jim's railroad retirement, you check down at the bottom.
It's right there, just ask.
Yeah, check that railroad retirement.
This,
Okay.
Isn't that what you're supposed to do?
No, don't check the railroad retirement.
Wait a minute. Okay, which one do you check the railroad retirement in?
Which one?
Of the two, documents.
It's still not.
It's in
Still
the,
red.
Yeah. I don't, yours did, or Jim's did the same thing, and I'm not sure how you guys got those read. Sometimes it means that you open up a worksheet inside the 1099-R, but I didn't see that you did that.
But how can you not check railroad retirement?
Because you don't check it. It's one of those quirky little things.
What are you checking?
On a 1099?
On the 1099, don't check railroad retirement. In the the boxes,
Right. But didn't you tell us to?
no.
Okay, where did we check the railroad retirement box? I checked it on something.
You must have checked it there. We didn't check it on that one.
You know how it would flow
So
into the
railroad
New York
retirement,
State?
don't check box one,
No.
even though it's 15 and a half.
Yes.
So you don't check any box for that? But it's still red.
I think that's in the, hold on one second. Did he put that in the, what's that?
I I got him a better refund, we'll check that box.
I don't think it has it in here. It's a 414. Let's see, it doesn't have it in here. No, it doesn't have it in here. Okay. Nope, doesn't have it in there. Okay.
So what's the note on your cheat sheet here that says New York State check box is check railroad box? It's the railroad box.
Because this is, let's see, this is railroad type tier 2. So this one isn't included. I'm trying to remember because there is a subtraction on the line 122 on the state, but this doesn't qualify for the railroad retirement income. Subtraction.
Just for the
Mm-hmm.
railroad, the blue, I go down to Social Security, and the back to bring up that worksheet. Look right.
For the
For the railroad having blue, I'm just trying to see where I put that information. It's on my worksheet at 1040, that's where it ends up.
I wonder what this is.
So, yeah, the blue is the same as Social Security.
Mm. They did change that. So yeah, do check the box. So the answer key is wrong. So on the box, on the 1099R, check the railroad box. So they should have 546 on the state.
So the railroad box is on small.
Box 4, or it says railroad box.
Oh, railroad.
So state
So-
is 946.
Yep,
Yeah,
because this one does.
check box one.
What's that?
You get the same answer to check box one.
It's excluding it, but it has to carry over to the IT 225, page 2, where it says S-122 for the number. So,
Okay,
Do we
so
need to know this IT 225? Is that part of the new one?
no, it'll do it for you when you check that railroad box.
546 refund state is the correct.
It is the correct number. Yep.
We do check the railroad.
This,
Because this one does qualify. Some of them don't. This one was a tier 2. Sometimes they're not tier 2s. Then you would not check it. Okay. All right. Okay. Let's see. So we're going to do. Okay. All right. So we're going to get into chapter 10. Oops. All right. So we're going to do chapter 10. And we're going to get into itemized deductions. So chapter 10 in your workbook. Believe it or not, we're going to talk about this. And you need to know this for anything prior to 2017, but probably won't have to know much of it for 2018. Okay? However, that is the federal side of it. It is now our understanding that you will have to know more about it for 2018 because the state is going to treat it differently. So we've gone from not needing to know it, the whole section depleted, to now knowing it in a short time frame and following Tuesday's results. God forbid that something happened in our Congress that reverses the tax law prior to the end of the year. Because if that's the case, we don't even plan on filing tax returns till June. So by the time they get all the paperwork fixed again. So I don't foresee that happening. I don't think that's a battle they're going to choose to fight. There's been too many good things with the economy right now. I don't know that they do that, but again, it's like a bunch of little kids in a sandbox that can't get along. Okay. The one thing though, like I said, on the state, people have kind of gotten this notion because of the postcard that you're not going to get to itemize anymore because of the higher standard deduction. That's not necessarily true. Okay. Because like I said, you still need to keep track of all these things because the state has basically said, we're breaking from the federal. We're going to honor all of your itemized deductions. We're not going to limit them and we're not going to get rid of the 2%. Okay. So basically, it's kind of like the year where same-sex marriages where we had to do the returns 2 ways. Okay, because you had to do it once, send it, then go in and change it, and then send the state. So it was like you were sending 2 different returns. Yeah, it was a lot of fun.
After the Democrats get Trump's tax returns when they're over the class.
Actually, with what we're doing on itemized and adjustments to income, he just played by the rules. He really just played by the rules. I mean, he didn't do anything illegal. He just played by the rules. He was able to take advantage of things that most people can't, obviously, but he just played by the rules. If they didn't like the rules, then they should have changed them. So,
but he still hasn't, he hasn't shared his tax.
well, do we have your tax return up here, Janet?
Excuse me, no.
But isn't it the law that he has to?
No.
No.
No. So,
Nope, never been the law. So bring yours in next Tuesday and we'll put yours up there, Janet.
it's really not very interesting.
Are you gonna run for president?
Yep. Neither is Trump's. It's just tax law. It's, so. All right. So we're going to do, and we divided this into 2 sections. Okay. All right. Oh, before I forget, I have something for you. Since you're all here, all my students, all my top students are here, I should say. Okay. Okay. So all my top students are here. So, all right. This is the way we're going to do this. Everybody got a pen? Anybody need a pen? I figure I'd get you ready for pop quiz. See if all you guys who are playing hooky did your homework. We got a pop quiz. All right. So pop quiz for everybody. Okay. And the way I do my quiz is you have to write the question. It's kind of like Jeopardy. All right, so I'm going to give you the answer and you got to write the question. All right, so we ready? Okay. Okay, so okay, first I want you to write number 1. Okay, these are going to be the answers, and then you can write the questions, but I'll give you the answers first, okay? First one, number 1, is earned income. You might want to write W-2 after that. Okay, so don't have to be essay answers, but second one is unearned income. And after that, I want you to write interest and dividends. All right, number 3, taxable state refund.
Wait, 3 was interest and dividends together?
Yep. No, that was 2. 2, right? Was unearned income with interest and dividends. 3 is taxable state refund. Okay. Number 4, unemployment. Unemployment income. Okay. All right. What are we on? Number 5? Number 5 is other income. And after that, I want you to write W-2G. Okay. All right. What number are we on? 5. That was number 5, or are we doing? Okay, so number 6. Number 6, I want you to write down itemized deductions. Okay, itemized deductions. And indent a little bit, because this is going to kind of be the essay one that you have to include these words on. So indent a little bit. So under number 6, I want you to write medical expenses. I want you to write property taxes. I want you to write mortgage interest. Okay. I want you to write charitable deductions. And then I want you to write miscellaneous deductions. And after that, in parentheses, you might want to put gambling losses. Okay? All right, everybody got those? All right, so that was what, number 6? All right, number 7. Okay. Number 7, I want you to write dependent care. Okay. Number 8, we're on 8, right?
Mhm.
Number 8, I want you to write child credit.
But don't the word
Mm-hmm. You can write tax in there if you want to. Okay. And that was what, number 9 or number 8? That was 8. Number 9, I want you to write adoption credit. Mm, mm.
Like, who wants that one?
Do not adopt. Okay. All right. So we got that. Okay. And the last one I want you to write is federal tax withheld. Okay. All right. So everybody got that? Okay. Now, what I just gave you, those are the topics. Those are the tax documents that you will have on your computer midterm in 2 weeks. Okay? So if you, as we're going along, obviously we haven't covered all of them, but we've covered most of them. Okay? Those are the topics that you want to focus on for the midterm. All right? So yes, I did give you the answers, but I didn't give you the numbers where they go on the return. Okay? But those are the topics that you want to focus on.
Oh, no, railroad.
Do you want me to rewrite the quiz, Gene? Exam. Do you want me? I can rewrite the exam and throw a college, you know, a real doozy college education. Or I could really do a good one for you, that he works for the railroad, he's homeless, but he's drawing a retirement pension from the railroad. No?
I promise I'll study that railroad.
Okay, all right. Okay. All right, so that's a little bit about that, okay? All right, so let's get back to itemized deductions. All right. Remember, let's see, next Tuesday I'll hand out the take home, the written part for you, and that's both of the the computer and the written midterm are open book. But just gives you a chance that if you want to mark certain pages for your midterm, I have seen people come in with the big tabs after I've done that on all the sections that have to do with that, so they know right where to go looking through their 2 books. So, all right.
How many computer problems out there are being
For the midterm, it is 1 return.
Is the test on Tuesday or Thursday?
Which one's that?
On Tuesday.
The computer, it's on Thursday.
Next week from today?
Yes, the 15th.
So what happens if we just screw up like one part of it? Does that
I give you a get out of jail free.
All right.
Okay. All this is, it's, you know, we've had, it's all like a game show for you, genius. We've had Wheel of Fortune references. We've had Jeopardy references. Now, Who Wants to Be a Millionaire? You get that phone a friend, you know.
Lifeline.
Yep, that lifeline. Yep. All right. So plenty of references there, okay? All right. Itemized deductions versus standard deduction. We'll talk about the standard, okay? When it's not available, we kind of touched on a little bit. We were talking about that last problem with married filing separate. We'll talk when it's advantageous for the taxpayer to itemize. We're going to talk about medical and dental, tax and interest, charitable expenses, okay? So we're going to kind of take our Schedule A and we're going to start at the top and work about halfway down today. All right? Okay. All right. Standard deduction. Remember that number when we were doing the filing threshold that I kind of threw out there with the exemptions and the standard deduction? If you're single or married filing separate, $6,350. Anybody know what it is for 2018? They got their cheat sheet handy? 12,000. Okay. So they think that that's a big deal because they gave you, instead of the 6,350 plus the 450, 4050, they gave you 12,000. Okay. Now, married filing joint, 12,700. Head of household, 9,350. Okay. So those are the standard deductions. That is the starting point. All right. As you scroll down on that page a little farther, okay, on 10.4, some people get a little bump, don't they? Okay. Jim says,
I get it this year.
Jim says triumphantly, yes, I do. So,
Well,
okay.
I don't know if I do, I shouldn't say that.
Yes, you do.
Even the new stuff?
Yep. If you look at the little, that little highlight sheet
Okay.
in the box here, it talks about it. In 2017, if a person is additional for 65 or older or blind person, they get 1250, single 1550. So that's a little bump they get on it. Okay. And married filing joint, that's 1250 per person. So that's an extra 2,500. Okay. For 2018, married filing joint, you're going to get 1,300 per person, or 2,600 if you're married filing joint, added to your 24,000. So that puts you at what? 26,600. Oh, okay. All right. At least she told you she was. So, all right. I'll be a gentleman though. Mary Ann was disclosing her age because we were talking about retirement, but I won't tell you how old she said she was. So.
I learned a long time ago.
Okay. Good for you. Good for you. That's all right. That's why you've been married as long. You're married as long as you've been. So, all right. So we have that with, and then you see in that table, you know, if somebody's blind or somebody's 65 and over, then you can see how they get that extra on their standard deduction. Okay. All right.
So wait, they get 12,700 each plus 13,950 each?
No, they don't get 12,700 each. The standard deduction for married filing joint is 12,700.
Right.
Mm-hmm.
What is it when they turn 65? It just goes up to 13,950.
It's in the little chart down there at the bottom.
Yeah.
Yep.
That's what you're saying.
Yep. So, okay. So yeah, so they get that little extra on there for the standard deduction. Okay. And the top of 10.5, it shows right there where those boxes would be checked. Okay. All right. So that's the standard deduction. Pretty straightforward. And like I said, a little handout I gave you with the highlights shows how basically it's the same thing, just greater amounts for 2018 because the exemptions are gone. $4,050 is gone. Okay. We can choose to itemize. All right. And it's fascinating the number of people that think they itemize, but they don't. Okay. Oh yeah, I itemize all my deductions. I can take a deduction for this and a deduction for that and a deduction for this. Okay. The thing about it, as we're going to learn here, is yes, you can take it, but some of them have thresholds to reach before they count. Okay. You know, and I have taxpayers come in and our new clients, I say, oh, I see you take the standard deduction. He goes, oh no, they itemize for me. I said, well, yes, they do, but you did not reach it. So we took the, you know, we would take the greater of the two. If you would like me to take less and you can pay taxes more, I'm happy to do that.
You can actually elect that. I didn't realize that.
Why not?
That even if the itemized is less, you can still say I want the less.
Why would you?
But they even say you gotta check it out. I was really shocked. Why? Why would they want to do that?
Mm-hmm.
I want to meet the people that actually do that.
Feel like they haven't paid their share somewhere along the line. I don't know.
Like, I want to pay more.
That's right.
Okay.
Some people get stuck doing it because they're Married filing separate.
Yeah, married filing separate would be the case, like I said, because they don't get, if one itemizes, the other has to itemize. And they both start at 0 and work their way up. So, okay. All right, so we have that. Yes, there's that little thing there that's on line 30. You can say, I elect to itemize even though they are less than your standard deduction. Check here. I don't know. So, all right. So we start out with medical and dental expenses. All right. Medical and dental expenses are a lot more extensive than most people realize. All right. So if I do itemized deductions and I want to take medical, we already talked about one, and that was premiums, Medicare premiums, that they flow right over when we do that worksheet 1. Okay. Dental, vision, they all count. All right. Some other things that some people don't realize that count that are deductible medical expenses. Alcoholism. Okay. That doesn't mean that if taxes drive you to drink that now you can deduct it. Everybody's been wondering how they're going to deduct this class. There's one way to do it. If you can declare that your alcoholism is a result of my tax class. Okay. You can do artificial teeth. Okay. Was a new rule, birth control pills. All right.
Hearing aids?
What's that?
Hearing aids?
Huh?
Hearing aid batteries?
Okay. You can deduct fees paid to Christian Science practitioners. So if you are of the religious faith of the Christian Science, which I thought that they did not do any medical, so that was, no, that's Scientologist. No, which one is that?
No, that's.
Christian Science, right? So, all right. Chiropractor. If your car has special things, knobs, stuff like that, you can deduct that. So if you have to buy a car with special things on it. Fertility enhancement. Everybody always asks me when I talk about dependents, they say, can I deduct my dog? And I say, yes, you may. Is it a service dog? If it is a service dog, even an anxiety dog that you have been prescribed to have in your presence when you leave the house because of anxiety, that dog is then deductible. And as it says here, cost of buying, training, and maintaining a guide dog or service animal to assist a visually impaired or hearing disabled person or a person with other physical disabilities. So that means the grooming, the treats, everything for the dog is deductible if you have an anxiety dog. Granted, you're going to have to prove it to me, but I'm not going to give it just because you're walking in with the dog. Okay. Hearing aids, as we talked about. Insurance premiums. Again, if they're out of pocket, not the ones that are deducted on your paycheck, because that's pre-tax dollars. So that would be a double dip. You cannot take what's coming out of your paycheck because they lower your taxable income by that amount. Okay. So you cannot take that. Lodging. If you go to the Cleveland Clinic and you have to stay overnight for procedures or guests or even family members, some of that lodging can be there. And same thing for meals. Okay. All right. I actually helped a friend out with this. They went to a conference in Washington, D.C. For hemophilia. And I said, that's deductible. They went to a medical conference about their disorder. That would be deductible. Okay. We talked about all the Medicare parts. All right. Psychiatric care, psychoanalysis. All right. And sex reassignment surgery and related hormone therapy. Okay. And I know this firsthand. I had a client that I was doing a tax return for the first time, came in, sat down. Across from me was an individual. That individual handed me the driver's license so I could prove identity. And the driver's license said Kevin. No offense, Kevin. Okay. All right. It was not a Kevin sitting across from me. It was Kristen. Okay. And I said, you know, politically correct. I says, I understand this is not you, but you're saying this was you. And she said, yes. So we went into it and I says, okay. I said, we'd start talking. I says, medical. What cost did you have to have your gender reassigned? She looked at me kind of strangely and she said, why? And I said, because it's deductible. I said, as long as you can prove to me that you had, as it says here, gender identity disorder disease. Okay. She proceeded to have her psychotherapist fax me a 6-page letter describing her gender identity disorder. Was way too much information. I didn't need to know all that information, okay? All right?
Did they
I-
want before and after pictures?
No pictures. No, there were no pictures, Gene. It was just, but it was a very good description of what transpired. She actually ended up, I think she went to Pennsylvania to have it done. It was a retreat or something. But, so that's what happened with it.
What was
Now-
the cost?
About $45,000.
Oh my gosh.
So, but that, let me backtrack. 45,000 is what we could deduct because that had to do with her gender identity disorder. Okay. I had to sit with her and talk with her because she spent several, let's see, how could I say this? She did not purchase the base model. Okay. She got some extra bells and whistles. All right. Okay. So anything that was outside of her need to be able to identify with her new gender were not deductible. So if she got any extras, we couldn't deduct those. Okay.
Just the base model.
Just the base model. Yep. Just the base model. Okay. So I guess to say if there was any augmentation along the line. So
There's a pub for this or porn?
a pub for this, there's actually a IRS court case. So,
You have to go to court cases for that?
yep.
Wow, that's
That'd be a
cool.
good one for
Yep.
everybody.
But you can only deduct what she was paying it.
Are you taking notes, Janet, on this?
Base
Okay. You hit F16 on your keyboard.
F16 for the case law.
Mhm.
Next is Lexus. Base,
All right.
base.
Base model. Okay. So yes, so that is, and that sometimes surprises people, but smoking, stop smoking, telephones and TVs if you need those for hearing or vision impairment. Okay. Transportation to obtain medical, you get certain things per mile. Okay. Tutoring, like I said earlier, veterinary fees for your guide or service dog, wheelchair. Okay. One thing too is if somebody has to retrofit their house because of a disability or illness. I helped somebody and we went back and amended 3 years of returns because we happened to be sitting talking about health insurance and she was explaining the situation with her husband who had developed a disorder and is now in a wheelchair and basically bedridden. And they had to add an addition onto the house where they could put a rail in for him for bed and special bathroom. It's all deductible because it had to do with his medical condition. You know, the ramps you see people build on the fronts of their house, deductible. Okay. All right. Okay. Now, things that are not deductible. As much as we'd all like to say it, dance lessons are not deductible. Okay. Neither is cosmetic surgery. So I guess I should have said cosmetic surgery. So if you have the base model and you choose to get the cosmetic side done, that is not deductible. All right. Funeral expenses are not. Health club dues are not. Okay. Nutritional supplements are not. All right. Over the counter are not. Now, Vitamins are deductible if they are recommended by your doctor. So if he's saying that you need to take 100 milligrams of B12 every day as part of your treatment, that's different.
There's
Okay.
some weight losses out there. Do you have to have a doctor's thing for weight loss?
They are not deductible.
No, that sounds a little bit like
Well, it can be both.
Okay, with the health club, what happens if you get a heart attack after once you go to start working out?
Nope.
I know why, because like when you can do, you can provide your health up for $20 a year. There's like not that much.
Yep. But the weight loss, Kevin, that you were talking about,
That's.
okay. The parts that are deductible
Yeah, like,
are fees for membership in a weight reduction group, fees charged for weight loss activities at a gym, and food costs that exceed normal diet. Okay.
But weight loss surgery is not something.
Yes, and so food that exceeds normal diet. This does not mean, Kevin, that every time you go buy a Diet Pepsi that you can deduct the Diet Pepsi. Instead of, you cannot deduct a Pepsi, but you can a Diet Pepsi.
Well, everybody's always trying to lose weight, so.
So, all right. Okay. And just because you decide to select the gummy bears that have less sugar added, that is not deductible. Okay. Yeah, the sugar-free gummy bears. Is that possible? Is it?
diabetics.
The organic ones are good too.
Don't have much taste to them.
My wife actually sells those. And one of her clients is the culinary school at NCCC, and she sells the organic ones that are just absolutely phenomenal. I mean, they're not even gummy bears. They're like cotton candy in a rubber form or something.
Well, why don't you bring some in?
Well, they can't be in our house because the gal that runs the kitchen up at NCCC says by the time they do something with the culinary school, the students have eaten them all. So she has to order them and then hide them in another part of the building because the students will eat them before they ever get to sell them. So, but, all right. So, what's that? Medical spending account. It's kind of like FSA. So, all right. Okay, so these are our medical expenses, okay? So again, in there, Kevin was talking about the chart. What page is that on, Kevin? Let's see, 1010. Okay, kind of goes through some of them there. But like I said, don't be afraid to think outside the box with these. All right, the only bad part is, what do you have to get over before you can deduct it? 7.5% of your adjusted gross income. All right. So if I make $100,000, the first $7,500 does not count. Once I get to $7,500, then the meter starts and I got one deductible dollar starting. It's not like I get the $7,500 plus. Okay. And it used to be 10% when they first passed the Affordable Care Act. It was 10% for everybody under 65 and 7.5% for people under 65 or over 65. Yeah. But now it's 7.5% for everybody. Okay. All right. Bottom of 1010, it talks about those capital expenses. Again, cost and improvement is reduced by increasing the value of the property. Again, you have to do some calculations, but don't be afraid to think outside the box. And, sometimes, like I said, if I hadn't picked up on what we were talking about the condition of her husband and our conversations, I would have never thought of approaching and even amending returns. And I think I went back and found her $3,000 or $4,000. Okay. And we amend returns for $45. So she invested, it was 2 years. So she invested $90, and I think it was a little over $4,000 she got back. Okay. So Jim, if I said to you, give me $90 and I'll give you $4,500, what would you say?
Take it.
Okay. All right. Okay. All right. So that's, and then talks too at the bottom, 1011. We see this not as much out here, but with people that live in the older homes in the city, the lead paint removal. Okay. All right, and then it kind of goes through a whole bunch of different stuff about the medical, a little bit of explanations. A little bit more so than what we talked about, okay? All right. Now, medical miles. Does anybody know how much you get for your transportation?
17 cents.
17 cents, that is correct. So that's one of our first, no, 19 cents. No, that's 2016, 17 cents. Yes, 17 cents, okay?
For volunteering,
What's that?
for volunteering,
14 cents,
for volunteering is 14 cents?
yes,
Okay.
okay? All right. Okay. So that's the medical side of it. All right, now, page 1020. We're going to talk about salt. And no, we're not talking about a dietary aid. This is where we're going to talk about state and local taxes. That's what that acronym SALT is you hear them talking about. Okay, because the taxes that you paid in 2017 are deductible. Really no restrictions, you know, other than what can count. In 2018, your taxes paid are capped at $10,000. So once you reach $10,000 on your taxes paid, that part of your deductions stop. Now this is where, like I said, that the state of New York is coming out and saying, however, we're going to honor that. But to me, that makes absolutely no sense, because what do you not get to deduct on the state side?
State and local taxes. More political, don't
It doesn't really matter.
Doesn't really matter. It sounds good, doesn't it? We're going to let you deduct all of your taxes.
I'm gonna erase that.
Okay, and we'll see how the state, because I have a feeling what the state's going to do is probably allow you to deduct things on the state taxes that you haven't before. Because right now, New York is a pretty good place to live. You know, you sometimes, you know, you can argue both sides, but, you know, your taxes, you know, you look at the Buffalo area, there's not a bad public school. The roads are all right. They're always torn up to be repaired, but they're all right. So there's a lot of things you see. But if all of a sudden now you don't get that deduction of your taxes, what's going to happen to the population of New York and Massachusetts and California? Where's everybody going to go? Texas, Florida, Tennessee. I got family that, not my family, but a family that I'm helping, and we've been, they asked me to make a list of states where they have no state income tax because they were going to decide where they're going to retire. Because they were so tired of paying taxes in New York, they just wanted to go to a state. They didn't care where it was that didn't pay state income tax. Okay?
Well, you know, like some of the states that don't have income tax, they gotta get their money from somewhere. Or they don't spend as much as they left for.
Yeah, there's a lot more.
Like, a fellow moved to Carolina, a guy I worked with, he didn't have high property taxes, but he had a small kind of farm. They taxed his boat every year, and they taxed his 2 horses and tractor and all this other stuff. And he said it ended up being, you know, similar to what
Yeah.
the property taxes were low, but he still.
Use taxes. Yep, use taxes.
Okay.
You know, when we lived in Massachusetts, every year they would tax the blue book value of your car. If you ever been to Boston, you ever seen the cars they drive in Boston? Everything's about 1980 and before. Because nobody wants to pay tax on the blue book value. That's why you see all those late model cars there. I mean, it's not just for the movies that they film there. People don't drive new cars there because they got to pay tax every year on the blue book value. So, all right. So these are taxes you paid. And again, when I talk taxes you paid, state tax is withheld from your paycheck. You put that against sales tax you paid. Okay? All right. Property taxes, school taxes, taxes on your second residence. Okay, other property taxes you might have. That New York State disability, that $31.20, that's a tax. Okay, that's deductible. All right, so these are all the things that you can put on there. Now, like I said, the sales tax, you don't get state tax withheld from your pay and sales tax. It's whatever's the greater of the two. And this is where a lot of times, you know, I'll ask people if they're, especially if there's somebody that is not working, no W-2 income, has retirement, did you buy a new car? Because you get to deduct, in addition to your general sales tax, the sales tax paid on a new motor vehicle. Or, you know, here's your Trump thing for the day, Kevin. Okay, you can deduct the sales tax, not only the car, but an airplane, a helicopter, you know, anything motorized, a yacht.
Even for
RV?
2018?
Overboard?
Not for 18. Okay, that's one of the ones that's 17, yes. So it doesn't mean that you can go out and buy a helicopter, Gene, just so you can write off the sales tax.
Why didn't somebody tell me to buy my car last year?
Well, for most people, like I said, if you have W-2 income and you itemize, your state tax withheld from your payroll is always going to be greater than your sales tax. Plus, you live within Akron. Are you still in Erie or are you in Niagara? Erie? Okay. I know there's that little corner that's like 5 counties or something and 4 school districts of Akron. But, you know, so it depends on the county that you're in too.
So if I still could take the sales tax, if it outweighs my property.
If you itemize and they allow it, but chances are 18, you know, well, put it this way. Let me do some math for you here, okay? All right. If I make okay, I make $85,000, okay? All right. And we'll say that it's about, that's going to be what, maybe about 6% tax as far as withholding. That's $5,100, okay? To do sales tax, would need to buy a car that would have a sticker price of roughly $127,000. Okay? In case maybe I missed what you pull up in, but I didn't see any Lamborghinis or, you know, Rolls Royce parked in the parking lot out there. Okay? So what I'm saying is the sales tax is very hard when you put it against the state withholding tax in New York. Some states it's not, because why? Yeah. But that's going to be very high for them because, just as Jim was saying, they got all this tax that they pay. Okay?
If you bring in a shoebox with all your other receipts, and you add them all together,
You can do that.
then it can go over of what they stated.
You could, if you want to keep track of every receipt and every sales tax that you paid.
Do something that did.
Mm-hmm.
It shows that in all your receipts and you just borrow from the neighbor.
Yep. Yep. You think those guys that you see going through the trash cans are looking for nickels for bottles? No, they're getting receipts for sales tax. Okay. All right.
I'm reading that, like my property tax bill has a bunch of different things on it. One is like for the garbage pickup. Technically, I'm supposed to not include that in my property tax.
Mm-hmm. Sounds like a tax to me, doesn't it?
No, but they said in here, it
Right,
was
we're supposed to
because
take
it was
away
a
some of
service
that.
we were paying.
Yeah. But what I'm saying is, to you, it sounds like a tax.
Oh, yeah.
Yeah.
And the escrow says it's tax.
I know. Yep. If it walks like a duck and it sounds like a duck, what is it?
You're required to have it.
Yeah. Yep. If you don't pay your tax, or excuse me, wrong choice of words, you don't pay your trash pickup with that additional surcharge. I think they call them surcharges sometimes, don't they? That additional surcharge, you know, you think you're going to get away with that? No. It's funny how some cities, speaking of elections, how sometimes they'll have that extra thing on there for the town where they're trying to get them to do trash pickup, where they're trying to get it to be citywide on the same day instead of, individuals buying their own service. You ever seen one of those always fail? Are the towns where there's the most retirees? Because they only want to pay their trash bill for 6 months, not the whole year. And so I know 2 towns that have failed in, and that was the reason, is because they said the voter turnout was such, it was people that were transient or summer or snowbirds. So they didn't want to have to pay trash for the whole year. So they didn't want to have it being an additional tax on them. So, all right, talked about general sales tax. Okay, we talked about state disability insurance. That is a tax, even though it is called state disability insurance. Now, Jim would beg to differ. He says, well, if I can't take the tax on my trash, how can you take the tax on that? So that's just the way that the tax works on that.
And
Okay?
it's always a flat fee that state disability, and has nothing to do with your income.
Nope. More so the number of pay periods. And you should only ever have to have $31.20. Yep, that's always. So if you work, that basically whatever that works out is like what, $1? Is it $1.80 or something? What do they take out each check? $1.80?
Is it federal tax?
That's a state tax, New York State Disability Insurance. Okay. All right.
Real estate taxes, when you turn 65, is there lower rates for people who are 65?
The star? Mm-hmm.
Enhanced star.
Yeah, they're doing that a little different. The forms are a little different this year for the star and the enhanced star. So.
And just a note, if you're turning 65 in 1 year, do it at the beginning of the year, because I didn't turn 65 to May, but I missed it. They said, oh, you got to do it, even though you don't sign up for it in January.
Yeah,
you don't get it.
I was going to say the deadline's like March 15th or something.
First.
Yeah.
But when you have February 28th, forget that March 1st, that next day, so a lot of people miss it. That's bad.
Mm-hmm. And then they back out your pension, some of the stuff like that. So I forget, I help people fill them out, and each one of the towns is different. Some towns you can walk in and say, I'm 65, and they go, okay, great, here you go. Other ones, they make you jump through hoops. So.
But if you get a new house now, they don't give it to you. They give it to you as a check. They do not take it off of your taxes.
Mm-hmm.
So.
Yep, and then.
Grandfathered in unless you get another home.
Yep, and then when you do the itemized, those property tax freeze checks and stuff, for most people that don't itemize those checks, it doesn't matter. Everybody feels like it's like the state refund. They got to put it on their return as income and tax it. But you just adjust their property tax if they do itemize. Okay? So you get that check for $150 or whatever it is that they mail back to you. And those will probably stop pretty soon. Why?
Because they won't be itemized.
Well, not as much that, but what just happened on Tuesday? No. Governor got reelected. It's just like, remember the family tax relief tax, that $350 that they put on the return? If you made, more than the EIC amount, but less than $120,000, you got a $350 family relief credit, and they were mailing checks out.
Mm-hmm.
As soon as the election came around, the checks stopped. Mm-hmm. Well, we don't have money to pay those right now. We'll resume them later. No. So some families got it and some didn't. And where did they send them first? Upstate.
Of course. Should know.
So I would think that's almost buying votes. All right. On page, let's see, 1026, this is a little chart we'll talk about when we get on the Schedule A with the itemized, and we do, I'll show you how that sales tax sheet works, okay? We talked about real estate taxes. Very important that, if it is you buy one house and sell another, that you make sure, I think I mentioned earlier that, seeing that HUD 1, because maybe you paid taxes, but what happened in the closing? You might have got some of it back. So just because you had 2 homes in a year doesn't mean you get to double dip all the way around on property taxes, because you may not have actually, as far as a cash basis, paid that. You might have been reimbursed for some of those, especially with the difference in the way that property and school taxes fall. Okay. All right. Okay, interest you paid, 1030. All right. So for 2017, the interest that you paid on your home mortgage and your home equity line of credit are deductible. There's some limitations and stuff, but most people don't reach that. In 2018, the interest on your mortgage is deductible. The interest on your home equity line of credit is only deductible if you can prove that it was for improvements of your home. So for all these people that ran out and said, I am going to debt consolidate, take out a home equity, take care of my student loans, my credit card, and pay off my car, and put it into this low interest rate on my home equity, they don't get to write it off anymore, because it is not tied to their home.
What if it's a line of credit? I mean, I've had that thing for 30 years. How am I gonna prove that I have any of it?
We're trying to figure out how we're going to do waiting room sheets right now. How are we going to ask people, what did you use this loan for? If you used it for improvement of your home, that's fine. But if you used it to pay off a credit card or student loan, nope.
So in the last 20 years, if I've used one thing on there that's not related to my home, I can't. Good.
The whole thing is no good?
You can't write out the interest anymore.
It's not by
But-
year, based on what she uses it for?
No, if that payment's going for something is not for home improvement.
Oh, just that one payment. The rest of the payments, she was buying things for her home, to improve her home.
What, she'd have to break it down, yes.
You'd have to break it down, so you just wouldn't use that part of it.
Yep. So if the money that you are paying back right now was used for things other than your home, you don't get to deduct it. But if you can prove that the money you're paying back was used for things to improve your home, capital improvements,
Paid it all off over a long time. And other stuff.
yeah, it's kind of diluted, isn't it?
Crazy.
So, but that's what the difference. So yes, deduct mortgage interest, home equity, okay? All those things that we have, all right? Points. The one that went on last year was mortgage insurance premiums. That was an absolute nightmare, okay? At first, going into 2018, they were not going to allow you to deduct home mortgage insurance premiums. Then when they passed the new tax law, it was in there that they put it back in. We were almost a month into the filing season. Everybody calling up and said, hey, you left it off there. Well, yeah, we were supposed to. You got to put it back on. And then all the mortgage houses, the financing mortgage houses had to reprint all the 1098s and send them back out with mortgage insurance premiums on them. I still have people coming in. Yeah, I just didn't get to it. And you know, it's $100, $200 for some people, depending on how their mortgage works. But that's $100 or $200. Okay? I don't know how many diapers I'd buy, but considering I'm back in the diaper market with grandchildren, that's quite a few. All right. So that's the home interest, or excuse me, yes, the home interest. Okay. Talks about interest that cannot be deducted. Personal interest. So no, the interest you're paying on the credit cards cannot be deducted. Okay. Service charges, annual fees for credit cards, loan fees, credit investigation fees, mortgage insurance premiums, and VA funding fees. Again, in and out. Okay? Interest to purchase or carry tax-exempt securities. So these are all things that we cannot deduct as far as interest. All right? Most of the time, you will see a little form that looks like this for mortgage interest with 1098, okay? You will see up there that there's a mortgage interest received. On there now, they're gonna start putting that outstanding mortgage principal because they have lowered the mortgage amount that you can deduct the interest on. There is a threshold. All right? I think for 2000 and, did I put it on the cheat sheet? I don't think I put it on this one. Yes, mortgage interest. So this one applies to you, Janet, okay?
Oh, yeah, right.
All right? So it says here, taxpayers may deduct in 2017 itemized deductions, interest paid on a mortgage secured by a principal residence or second residence. The mortgage loans are up to $1 million. So that $1 million mortgage you have on your home, Janet, in 2017, you could have deducted it. All right, now they've dropped that to $750,000. So that extra $250,000 mortgage you have on that home, you don't get to deduct your interest on that.
You know that there's Sheridan, those brand new houses? They're like right up to the street now. They're so huge. They're really huge. You see them? On Sheridan.
Okay, and then points on principal residence. And a lot of times on this one, they'll have the property tax on it, okay? So property tax a lot of times show up down here in the lower box. All right. The other thing is, you gotta pay attention to these 1098s, because if it's somebody that has rental property, okay, you might have to make sure, because sometimes they'll have it mailed and you look at it and it's got the person's residence on it, but it might have something about the address of another piece of property. So it might be mailed to their home, but the actual property is the rental. So where the property is securing the mortgage,
So then this whole piece of paper, we don't deal with.
well, we would for the rental, yes,
Oh,
but not for the
is that a rental form? Is there a rental? Or-
Schedule E. Yeah, we'll do that later.
Okay.
Okay?
It's not a limit, it's just a second home.
Yep, you still got to deduct it. Yep. So that's where when that you know, if that address you see there is something different, you got to make sure on that one. Okay? As you can see there, we're kind of in that middle section of the Schedule A, kind of lines 5 through 9. And 10 through 15 talks about all the interest and the property taxes. Okay? All right. And we're going to go one more section. Charitable contributions. Gifts to charity. Okay? As I told somebody the other day, and I don't know whether you remember when they first passed it, is that the heads of Catholic Charity, City Mission, places like that, they were coming out and saying, because of the new higher standard deduction, our contributions are probably going to drop 10 to 15% because people will not get to write them off. Okay? Which I understand their philosophy, but if people are only giving for a tax deduction, exactly. People are still going to give if they really want to give. So, yes.
The standard deduction is going up some bit because we're not going to have exemptions.
Yes. Yep.
The standard deduction, how much is it going up?
We already talked about that. It's right here on the sheet.
Him that. It's not really hurt people. So give an extra.
The next one? Yes.
What's he saying about that?
This little one? We're not here. So, but
I have it here.
No, they didn't have that.
I don't know if I have any extras. I think I ran enough because I knew how many were in class.
I have this.
Yeah, it would have been those, but I gave them out, was with the tax comparison tables. Kevin, you got them?
Yeah, I have them some days.
Yeah. Gene, do you have them?
Not really.
Okay, but I did, yeah, okay. All right, yeah, that's the last set I had because I kept one.
Okay, we have the next one.
You gave me $700.
Yeah, because I know I ran enough for each of the classes. Okay, so, all right, so I'll try to remember to bring some up. Okay, all right, but yeah, that's the standard deduction we were talking about earlier, Jen, okay? Okay. Okay, so charitable contributions. Back to what I was talking about. The thing that I've told people is that for charitable contributions is that with the higher standard deduction, they're going to have to actually add more to the charitable. So if my standard deduction was $12,700 and it is now $24,000, that means you need to give an extra $12,000 plus to the church to still itemize. And that's if you don't go over the $10,000 on your property taxes. In 2000. Well, because say I'm itemizing because I have $15,000 in state salt, but now that's rolled back to 10.
So I see what you're saying, so now that's.
Now you got to give $18,000 to the church to still itemize. So the churches might make out pretty good in this if everybody wants to itemize.
I'll pray for them.
Well, that's a good one, Jim. I like that one. I'll pray for them. So,
Every charity on
Yeah.
what's that?
every charity on TV, you see the commercials, always in 19 million monthly gift. I mean, it's funny.
That's called the Walmart effect. Walmart started that because they took everything, and it wasn't $5, it was always $4.99. And just the way that the mind works with numbers, it's a marketing thing. That's a Walmart effect. And then when it's on sale, it's $4.49 because your mind automatically goes much more to what?
4.
Yeah. Yeah, it dropped it down. Now it's around $4. But they've really only dropped it, what, 50 cents? And $4.99? Yeah, you kind of think about the 4, it's close to 5, that's okay. But now when they put it on sale. And then when they really put it on sale, they mark it down to $4.19. Dean's going to go up to Walmart tonight and look at all the numbers. Okay? All right. So, but basically with charitable contributions, they have to be charitable. You cannot expect anything in return. Okay? Several people I've been helping the last couple of weeks fill out their RMDs that they're doing directly to charities. And one of the questions on there a lot of time is, did you receive anything in return for your contribution from your retirement account in the form of this RMD?
Like if you get a meal, it doesn't count.
Yeah.
The value of the meal you must deduct.
Yep. So, but you have to be careful because they can. All right. With the charitable contributions. All right.
They also tell you how much each item of clothing is at Goodwill.
Yeah. Why not?
Yeah.
Okay. So we have the charitable contributions, gifts to, what was that, Janet? I'm sorry.
More than you would think, sorry.
Okay. Charitable contributions, okay? They have to, again, be charitable, not anything. And giving to your favorite politician is not a charitable contribution. All right? It can be in the form of cash or non-cash. All right? Okay, there is, and I will add that to my list. Is it in this one chapter? Did he leave it in there? Did he leave the goodwill list?
Yeah, it's in
Yeah,
there.
it's in it.
Where's it at? There it is. Okay. So on page 1055, it basically has the values, kind of like Jana was talking about. And we have to have basically thrift store pricing when we value our goods. All right? So if I take in a woman's t-shirt, if it's $1, I'm probably that t-shirt is going to be cut up and waxed in the car. All right? If it's $6, it's got some retail value in a thrift store. All right? So we can do that. And not everything's going to be what everybody's sentimental value is. I'm giving away grandma's tea set. When we cleaned out her house, I know she paid $300 for it. Well, that's, not what we're going to get for, thrift store pricing. We're going to have to go with a different value.
You could have got the clue and nobody bought it in the yard sale.
Yeah.
Yeah, or you're going to have to go to the, what is that play? Every once in a while I watch it because I think it's fascinating. Antique Roadshow. If you take a tea set and you find out that she inherited it from her mother, who was the chambermaid or whatever for Thomas Jefferson, all these obscure things. So, okay. So that's where you have on those values. All right. Again, charitable contributions, there are some limit on the deductions. Don't see a lot of people get this because, your income has to be pretty high. This is where sometimes they will scrutinize, and I can remember, again, I think I used the example before, Mitt Romney got scrutinized for the amount of charitable contributions he was giving to all these organizations to reduce his tax. Well, when his income is as high as his, it's not as much bang for the buck as somebody that's maybe in our tax class, okay? Not just classroom, but tax class in general, okay? The other thing is cars, okay? A lot of times people will be donating cars, vehicles for vets or whatever that is that they have, okay? Or the vets, and that's, typically it's $500 that you get for it. And you have to have the VIN number. All right? And again, most all these organizations, in order for them to keep their 501c3 status, they know what documentation they have to give you for their records. All right? All right. And you must have a receipt for your charitable contributions. I realize that the guy at the Goodwill truck just hands it to you and says, here, you fill it out. Okay? All right? But there are times, and the state is doing this a lot now, they are auditing people for charitable contributions that seem out of the ordinary. And as sad as it seems like they're picking on the people that are cleaning out mom and dad's house because they inherited all this stuff that mom and dad had. And, dad was 5'2", but boy, dressed to the T, but nobody's suits, fit that dad had. Okay? So they are doing that. Best thing I can tell you to do in this day and age of cell phones, start clicking some pictures. It doesn't have to much be inventory, but clicking those pictures. Okay? I do it every time I take something out that we're giving away, or, I get it out there and then I turn around. By the time I get back to the house, somebody's already picked it up off the curb anyway. But, so I wonder how the guy did with the lawnmower that I couldn't get to run. He even picked it up in the wind and the rain the other night.
It's metal.
What's that?
Yeah, scrap.
Not as much as it used to be. Metal's not as good. That's not as good as business. Found that out when we had a garage sale and we had one of the neighbors brought them over, and my wife won't part with them. She loves to cook in cast iron, but they had a couple cast iron skillets, and the guy says, no, it ain't worth it anymore. So.
Aluminum is 50 cents a pound.
Is that? What's
Yeah, I had my old swimming pool I took down because everybody's gone.
Uh-huh.
I was trying to give it away, nobody wanted it, so I took it to the scrap yard. I got $500 for it. So it was like,
Wow.
I did, glad nobody wanted it.
We, every once in a while for the offices, we'll pick up on some of the, when they empty some of the state buildings, we'll do some of these auctions for it and to get desks and stuff like that. And a lot of them are in pretty good shape and people hardly use them. Ran into a guy one time, we were at the warehouse and there was a whole lot of metal file cabinets. And I bet there was 150, and that's what he bought them for. He wasn't going to do anything. He just was going to scrap them. And he got it for low enough that he was going to make money on it. And there was some aluminum in there, so that's probably why he did that. So, okay. All right, so that's with the charitable contributions. Again, receipts, cash, non-cash, okay? All right. And if we don't know, again, we have to use thrift store pricing, fair market value, okay? Now, what if I'm giving shares of stock? Anybody remember what the reading said? Because some people will give to charity, they will give them stock. And I hear this a lot for the Catholic Church in Buffalo. So they must have some serious stock portfolios.
Of the fair market value or the cost of the staff,
When and the market value is determined when?
when you give it.
Yes.
So if that is higher than what you paid for it, you only get to deduct what you paid for.
Mm-hmm. Yep. Yep. Because there's a question, 10E. Okay.
So, yeah, that's what I thought, because it didn't make sense, but, so like if I bought stock 10 years ago and then give it, donate it, or.
What's your
It
basis
doesn't
in
matter
it?
if it tripled, I only get to deduct whatever I paid for it.
Mhm.
That's what you actually paid for, you didn't turn it in.
Yeah, because you're actually donating. What are you giving them? What value or basis do you have in that? You don't have the basis of.
I didn't,
How much it is now, because you didn't turn it in, you only rolled it over.
But, I mean, when the church gets it, it gets sold. So if it's worth $30,000, they're going to get a receipt back for $30,000. Not for what you paid for it, because they don't know what you paid for it.
Well, what's the IRS going to typically do?
Fair market value.
They're going to do lesser. Yeah. So, but like I said, just make sure that, with everything that you have for itemized deductions and that you have records. The state is just being ruthless right now. Okay. Some people, in fact, somebody at our office right now is going through an audit from the state. They were able to produce every check. That wasn't good enough. Okay, so you wrote a check to them. I don't know that they received it. Well, they cashed the check. That's not good enough. Now she's got to go to each one of the charities and get a letter from the charity on the letterhead that says that they made the contribution.
a canceled check doesn't,
Yeah, that was a look on my face too, Jim. First time I heard that, because they were going through this. To cancel a check?
Yeah.
That's not good enough.
Huh?
What I just said, that's not good enough for New York.
It's not good.
Yeah, you have to go a step farther and you have to go to the charity.
Another.
Mm-hmm. Yeah, because every year we work out a Kingdom Bound and, for the time out there, for the mileage and for some contributions made, we had to go to the director of Kingdom Bound and say, yes, this individual made it. So yes, I can't stress enough right now with itemized, especially maybe this is predicating what they're going to do with the whole state itemizing. They're probably getting people ready, because if you're going to get extra stuff on the state, you better be able to prove it. And I'm several people, and I can think of at least 5 instances right now where I've probably faxed 80 plus pages of stuff to the state of New York. They're not looking at it.
No.
And I think I told the story. I did the one for the one gentleman I had, and it was 87 pages. And I called the auditor up, and she said, "Yeah, it looks good." And I says, "Does that mean you read the cartoon that I put in the middle?" She goes, "What?" I said, "Yeah, I put a cartoon in the middle. It was one of the pages. Did you see that?" She goes, "Oh, yeah, I did." And I didn't. So she never looked at it. So obviously, they just, what are they doing? Holding on to people's refunds. That's all they do is play games with it. So, okay. All right, so that is itemized deductions, okay? All right, and you got a little exercise there where you have to put things on a Schedule A, and like I said, we're kind of going just through half of the Schedule A. We'll do the rest tomorrow, or Tuesday, okay? All right, so let's take 5 minutes, and then what I want you to do is come back. We're going to do one of the problems, okay?
We never did our closing, I'm sorry.
I figured you guys were good on the quiz. All right. Yes, this is the all-star team of my classes right here. Let's see, what's good one? We're gonna have, if you guys want to start putting stuff in, let's do, okay. Let's do 10-1, Jason Garland. 10-1. What table?
This one.
Mm-hmm.
Seems to me that this line and this line are asking you the same thing. What's the difference?
For us, yes. Because one's 4 3/4, well, no, you live up here. So one's 4%, one's 4%.
So this one appears 4%? The state's 4%, right? And the county's
4%.
4%?
Yep.
Then what's here? Because I don't get the same number here as I got when I ran it through the thing online.
Well, this one would be 4% here.
Okay, so this was 4%. And so I write.
So did you, yes, the general sales tax table. So that's from that table.
Oh. You got yours.
There's that little funny table.
Oh, yes.
Page before or something.
Was it right before? No.
They were right after.
Oh, is it? Okay. I guess
You know which one I'm talking about?
Yeah.
This one.
I know I saw
Okay,
it.
so we're in New York, so we're using B.
Trying to
And let's see here, what is the
So it's on-
income?
on the
1,500.
flash drive, and there's a whole bunch of stuff that say, I think it's the first one, 2018, X matters or something.
Okay.
Part one.
I guess I only saved it to that. Like, keep working on my.
That's fine.
Sometimes when I'm doing this problem.
So 105,
Some of the charts, and that's why I don't have to.
and how many exemptions did they have? 217, okay. Yep, so that's good.
Makes sense.
And did yours support general sales tax? Yes, and
I
that's
feel
the
like I got
4%.
spread.
So that should be the same numbers here.
Mm-hmm. Mm-hmm.
So where do I? So I just, what number did I?
No, 46. So 663 should be on that one.
Okay. So it comes up the same.
Yeah. Like I said, it's so rare though that you get the okay, we're gonna do Mr. Garland, James P. Garland. So get started on his return. Everybody's got the main info in? Just about? Good. All right. Jason P. Whoops. We got Jason P. Garland. And he's living on 115 Freeman Road in the city of Buffalo. Nope, Williamsville. Okay. And we got his email. We'll just put his cell phone in there. Someday we won't have landlines, right? Okay. Sometime I wish I'd get mine back just so I could give it to telemarketers and that they could just call and there's no phone there. Let them have a heyday.
The problem with getting rid of landline numbers is tied to so many things in stores and everything.
Yeah. My mother, she was lived in Colorado, I think I've said, and so she lives in Iowa now, and her prefix, her area code for her cell phone is 970. For about the last month, she's been getting all these strange calls from Pakistan. I told her, I says, have you looked to see what the country code is for Pakistan? Sure enough, that's the country code. So whoever's dialing numbers got the wrong number in the sequence, and this, her phone number is the start of the international number for Pakistan. So somebody from Pakistan's calling her for help. So she doesn't answer. I said, well, what if they're in trouble? She goes, I don't care.
Depends on the phone bill.
If she calls her telephone company, they can get them blocked.
Yep.
And all you get is, I get a ring, but I don't get the call at all.
Yeah, well,
If they want to make, I don't know if they get the message.
they're still away. All right, so Jason's single, and he lived in New York all year long. And we're going to e-file this. Looking at his bullet points, boy, there's a lot of them. All right, Jason filed at 1048 last year. What's that tell us?
No.
Did not itemize. He'd like to do his refund for amount owed electronically. On his information sheets there, he had no health coverage. Ooh, little curve. Jason bought a home. Uh-oh. Okay, what are you going to ask him to bring in?
His HUD.
There you go, his HUD one, especially if he sold a house and bought another one. In this case, we don't have that, but it sounds like he's seeing that he does not know what to deduct. He must be a first-time home buyer. Okay, all right. So we have his bank information in there and his account information. Okay. And oops, I'm a little ahead of myself there. 2018, not 19. Okay. All right. Okay, we said he did not itemize. All right, what do we do with the health insurance? Okay, we checked. I'm in the way here. Okay. Did the taxpayer have insurance from the marketplace? No. Was the taxpayer going to ask for an exemption? Well, we'll kind of see. We might talk about that. So we're going to check the third box down. He did not have coverage for all 12 months. He has a penalty because he's not playing fair. He's not doing the shared responsibility that he has to have health insurance. I always thought that was an odd term.
It doesn't show him any penalty up in the treatment boxes.
Not yet. It will when his income comes up. All right. Okay. All right. So we have that. All right, so let's go ahead and get his W-2 in there. He's a plumber. And probably part of a union, so I'm very surprised he does not have health insurance, but that's neither here nor there. So let's get that W-2 in. Okay, and he worked for pipe plumbing. And 568 Colvin, I'll be his neighbor. Our corporate office moving. Those of you that don't know or haven't mentioned it, we are no longer at, as of tomorrow, or I should say as of this weekend, but we're no longer at Niagara Falls Boulevard. We'll have an office there, but not our corporate office. We're going to now be on Colvin Boulevard. Might,
I've never been on that street in my life.
Colvin?
Yeah.
We're by the Blue Plane.
The blue one.
It's a Veterans Park. There's a blue Air Force plane in the front of it.
Oh, a pretty big park, right?
Yeah.
And it's on a corner.
Mm-hmm.
Are these better accommodations?
Oh, yes. All right, so we have box 14, New York State Disability Insurance, okay? Type that in, $31.20, right? Okay. Does that qualify for retirement, 8880? Box is checked. Jim's thinking about this one.
Retirement?
My box is not checked.
Qualifies for Form 8880, it says. So I gotta take that out, right? Make sure you take that out. That is defaulted in there with that 414, yours will be.
Oh,
We default that in there with the 414 HSUB. So after you put in New York State Disability 3120, uncheck the box, okay? I'll never forget the summer we had a rash of letters, and that was how scrutinized the state was. That, no, you don't get that $31.20 credit for your retirement, okay? All right, and what did it say next?
United Way.
United Way, all right? And the thing you have to remember about box 14 is it does not carry anywhere. So let's make a mental note of that, United Way, okay? Biggest one that does it in the exact amount is Wegmans. $2 every week. Every employee pays $2 every week to United Way.
So it doesn't carry to the 1040?
Doesn't carry to the Schedule A where our itemized, yep. Okay, so we'll talk about it.
Do you need to put it in there?
Put it in there, yes. You always want to recreate, oh, you mean you have to put it on the Schedule A?
No, you put it in the.
Box 14?
Yeah.
Yes. Okay, do put it in there. Okay, and, all right, so we have that, okay? Now, we're gonna kind of do these next section together. So we talked about, he did not itemize and such, all right? Now, Schedule A. Everybody go to find their Schedule A on the tree on the left. Everybody got it? Okay, that is our itemized deductions. And yes, the Schedule A is going to look just like it does here, but it's going to fit on a postcard. Okay, this is what the return looks like for 17. We're going to talk about next week. See this section down here that says job expenses and most other miscellaneous deductions? Basically line 21 through 27 on a Schedule A. That's the part that's gone. Everything in there is gone. All right?
Or if it's on a postcard.
Yeah, why not? Cut and paste, you know, scissors, glue stick, and you're all set. All right? The one I'm very, very surprised with, because what is in that section?
Tax preparation.
Well, I'm not surprised about that one. He never liked tax preparers anyway, because they, you know, messed up his tax return apparently. But union dues.
How about home office? That's gonna be gone too?
For W-2 employees? Yes. Not for self-employed people.
Oh,
So that's what he makes less sense. So if I'm a salesman for a company, I'm better off being fired and become an independent contractor and a consultant because then I can write off all my expenses.
Right.
and probably make more money than my salary as a W-2 employee, and I can't write off any of my miles. I have one client that drives 43,000 miles a year. And I thought that was unbelievable. My wife drove 38 last year.
Not as bad as that.
Yeah. Yep. Yep. It's a good thing that the company buys a car, because if I had a car and my wife was going to be driving 38,000 miles a year, I'd go, wait, you got to find a job. But W-2 employees, that's what they're doing now, is probably doing a lot more cars because they can't write off the miles. So, okay. All right. So back to the bullet points here. Okay. Let's take a look. And the first thing we're going to do is we are going to do the stuff on the W-2. Where does that go? Okay. Jim, what does your box 5A say
Where am I?
on the Schedule A? Yep. What's your line, your income tax, box 5A?
5A is red, no, 2352.
Okay. But I thought your state tax withholding on your W-2 was how much?
321.
Well, that's not the same number. Why is that number bigger?
Oh, $31 differential.
Yeah, the disability.
Okay. If you type in NYSDI, box 14 carries to Schedule A. I don't know why that's the thing that carries out of 14 after what did I just say? Nothing goes there.
Except that.
Mhm.
The only United Way will. The donation.
Well, let's go down a little farther where our donations are. Remember line 16, 17, 18, 19. Is there any numbers down there? Nope. Okay. So let's do the donation. So go into line 16. And what are we probably going to do, Gene, on line 16? Yep, light up the box, hit F9, and there's a little detail worksheet. Okay? So, you take a look at this. This is a lot of what we talked about today. Yeah, this one's pretty involved, isn't it, Gene? Medical miles, it's got a little thing for us, because how much do we get? 17 cents. Okay? Talks about insurance premiums paid, not pre-tax. Puts that in there. You know, you can't put in there what comes out of your paycheck on W-2s. All right? Health, dental, cancer, whatever it may be. All right? Omit amounts used on form what? Remember what that is? Refundable credit. 8885. Remember those health care tax credit I talked about? For people that are displaced workers, or they were part of the bailout with Delphi and their insurance is paid. They pay for their insurance, but the government gives them a credit, so we can't do that. Okay. Qualified long-term care contracts. All right, used to see a lot of these. Don't see as many anymore. Why? Oh,
Expensive.
last one I saw how expensive it was, and it was only going to guarantee 2 years. You know, they're not lifetime either. You know, then all of a sudden they have fixed terms to them. So, all right. And then other medical expenses, okay? Medicare, remember we talked a little bit about that when we did the pink box, the 1099 SSA. That's where that amount that you put in that worksheet 1 on the 1040 carries over. All right. Self-employed insurance, self-employed long-term, so we have all those. All right. And it cannot exceed 7.5, and they'll carry that over for us. All right. Now, one thing is that, let's see, a New York consideration. Let's see if we can do this later. If you do put these, amounts in here, it will carry over to the state. Okay. And you may not get to itemize on it, but if somebody has a long-term care contract, and even though they don't itemize, put it in there, because it may help them on the state side, because it is a credit on the state. It is not a part of the itemized. And it's a non-refundable credit, so it'll eat up their tax bill. So somebody might have $3,000 here that they're paying for their long-term care contract, but it doesn't help them itemize. They're still taking the standard deduction. Put it in there, because it may show up as a credit and wipe out their tax bill on the state side.
You can't just put it on the state?
No. No, I would put it right in there, okay? All right? Okay? All right. That's the healthcare side. Contributions to charity. All right? And we'll come back to the medical here in a second, okay? All right. Cash contributions. He's getting that money taken out of his paycheck. So where it says cash contributions, we're going to use the 50% limit to the organization, okay? And we're going to put in there what? United Way. And how much did he contribute? $104, okay? All right. Now, there's a space, you know, there's a lot of lines. People give a lot of charities. You can F9 for additional worksheets. Usually I will try to summarize them, okay? I have people that give to 10 different churches. I'll just write church and add them up, knowing that they have record of it, okay? I'm not going to get crazy. I have one couple that they give to must be 50 charities, all right? Different things that they, and it's great. That's just what they do with their retirement. They have no kids and they just give to charity, okay? I just write MISC receipted, miscellaneous receipted charities. I'm not going to type all of those in there, all right? But I know that they have record of it, and then I take it and put that in their tax folder so it stays with their tax return. All right? Okay, so we got that. So then we pulled that off of there. All right? Now, let's go back to our bullet points on 10.5. Jason bought a home February 1st, 2017 for $95,000. He doesn't know exactly what he can deduct. So he brought all the receipts that he could find. All right? He brought his shoebox, as Mary Ann said earlier. All right. He had urgent care expenses. Yes or no?
Medical.
Okay. So let's go up to our medical. We're on that little detail sheet. And we'll put in there that he had urgent care. Okay. And how much was it? $900. He needs to get new insurance. Okay. All right. He went to see the doctor. Yes or no?
Yes.
Yep. Itemized, doctor bills. Okay. The one nice thing about our software too is when you're typing in these little descriptions on this page, they will carry forward. So you can ask somebody the next year. Okay. Dentist bills, yay or nay?
Yep.
What if they were part of a, Jim, I'm going to ask you a question here.
Okay.
If they were part of a gender reorganization, no, that's not the right word. If they're part of that so that you had a pearly smile when you became the gender you associate with, are they deductible?
Not if it was needed to have the smile to show your gender. I don't know.
If it was not part of the base model, then no. Okay, all right. That's right, that's right. If you wanted to have a bigger smile, that's, okay. All right, prescriptions. Yes, okay. And I just usually type RX, but okay. Because I'm not a very good speller, so prescriptions is a hard word for me. All right. Next one down is glasses. Yep. What about contacts? Okay. You don't think those are kind of extra?
Nope.
No.
Okay.
Some people can't wear glasses.
All right. Over-the-counter medications?
None.
Nope. Okay. Medical mileage?
Yes.
All right. So that little place up there at the top, we're going to put 328 in there. And what's it do for us? Calculates. Okay. So see up above where we're entering stuff, there's that little medical miles. You got the 328. All right. Dishwasher.
No.
Okay. Car loan interest.
Nope.
Okay. Credit card interest.
Nope.
He contributed to the church.
Sure.
Okay. All right. And I will let Jason know, Jim, that you are praying for him. Okay.
So if he's a plumber and he's self-employed, the car loan interest,
Nope. because well, he's probably gonna take mileage instead of the loan interest. Probably take mileage instead of actual.
So if he was like salesman, he would probably.
Take mileage, yeah.
And then be more in a different format.
But again, 17, yes, when we talk about next class, we'll talk about that, but then 18, that goes away, okay? United Way on the W-2, we got miscellaneous charitable contributions.
Yep.
Okay, yes, all right. Okay. It is charitable. Okay, and that was how much? $490. All right. Next one is mileage incurred as a Boy Scout leader. Nobody's going to jump at that one?
I would give it to him.
Yep.
Because it's a.
Well, I know Jason, and actually, even though he's not on his return, he's divorced and his son is in the pack.
Well, he's still volunteering his time.
But his son's in the pack.
So that's good,
That's
but
kind of.
he's a leader, so he's.
Well, then I need to amend my returns because I used to be the manager for my son's soccer team.
Yeah, but that's, your soccer league wasn't charitable.
Yeah.
Yeah, it's a nonprofit. It's a 501c3, the town league.
It is?
Yeah.
Oh, okay.
And I volunteered my time.
That's more of a, it's not more of a sport, this is more of an organization. And then kids pay for that sport to be in that. It's more of an organization.
Well, there's dues. When I'm in Boy Scouts, I have dues.
Yeah, that's a dues, it's not. I don't know, I'd give it to them.
It's one thing to be the leader and it's another just to be paid. Which wraps up.
You're on the right track, Jenny.
Yeah.
What's the caveat?
Being the leader.
Am I really volunteering if I'm going to be there anyway because my son's there?
How many leaders are there?
Well, what I'm saying is, you know, that's the thing I was talking about. I brought up about my son and the soccer. Yeah, you know, the whole the tax status and stuff like that. Yes, but I cannot say that I'm volunteering my time if I'm going to be there anyway.
But if your son's not there that night, won't you still be there because you are the leader?
Could be, yes.
All right, then there you go.
Yeah.
But then I'd have to only take it that night. Because other nights I'm going there anyway because he's there. So am I really volunteering my time?
Are all the other
Well, he
parents
doesn't
staying?
have a son, he doesn't have any dependents, so. He doesn't have somebody to go.
Well, but what I was saying is he's divorced and his ex-wife has the son. Tim's going, it doesn't say that there. No, what I'm doing is I just want you to kind of think about the process. And again, these are,
Large amount of your time and you don't even have a paid job. That is your.
yeah, it doesn't really matter that, okay? It's much more, you know, yeah, it's much more that are you there without, you know, I guess it's really not the word service.
Even when my son wasn't there.
What's that?
I was there even when my son wasn't there.
But what I was saying is that, you know, it's much more the fact of, are you volunteering your time? Or are you just doing this and you're already there anyway?
Well, I
So-
never should have, I was a Girl Scout leader, but.
So, all right, but yes, he's going to take it here. So we're going to do his charitable miles. Okay, Jim, you won.
Okay.
All right. Okay. All right, and then clothing to AMVETs.
Yes,
Okay.
that's not.
Nope. So we go a little farther down. See where it says other than cash contributions. Okay. Now, want to point one thing out. Right after other cash contributions, what does it say?
The name of charity.
No, there's a little red thing there.
83.
Yeah, so if what you give in cash contributions is greater than $500, we got to do another form. So guess what, Gene?
No.
There is, inside the worksheet, inside the schedule, there's buried a form. Okay?
Value over here is only $275.
Yeah.
Yeah, so he's,
So even though the contribution says cost was $1,200, fair market was $275. So we can just put it as name of charity right there and put AMVETs. And we can do 275, okay? My wife's a veteran, so anytime we get rid of stuff, we call MVets. You ever watch them pick your stuff up? They get out of the truck and they all stand around and look at it. And then they'll load what is the better stuff first. Why? When they get there, they unload the stuff that they don't want and leave stuff in the back that they might want to keep for themselves. And she knows it. My wife knows it. She's gone out there and talked to them and go, oh yeah, we go somewhere, we take a look first and we'll load the good stuff in first. So, hey, you know, no different than somebody picking up along the curb. Okay, so we have that, all right?
So if we needed to go into the other than cash on, we have to use that form, we just go over to where the 275 was for the FN.
Yep. So, yep. So what I want you to do is, I'm going to do this. You don't do this. Okay. Well, yeah, we got everything in there, right? No, we don't have mortgage interest. Let's do this first. I'll come back to that 82, 83 a second. Okay. So on the bottom of 10.7, we have a form 1098. So we're going to go back to our Schedule A. All right. And the first thing is, what is red? 5B. So I'm going to go there and light it up blue, and I'm going to hit F9. Okay. All right. Everybody got that? What do you see in there? Sales tax worksheet. All right. We're going to ignore the top. Kevin, this is that little worksheet that you were asking me about.
Okay.
Is this where you stuck it in here? Is this where you stuck it in the computer when you were trying to do it in the computer, or just the worksheet? Oh, okay. All right. So on this, we're going to enter, what state are we in? So line 1, we're going to enter New York. Okay. All right. Yep.
So we
Line
did
1.
F9, and now we're in a sales tax worksheet.
Okay. Schedule A, line 5B, light up the box. Hit F9, sales tax worksheet. And we're going down to the part that says enter the state of residency, New York. Okay. All right. So we have that. You can see these questions. It says, do you live in, yes. All right. In that little table, what was the letter that we always used? Kevin?
B.
B, okay. So you're always going to use B because we live in New York. All right. Kevin, what page was that on, that table? You remember?
1025.
Yeah, so 1025, there's a table. Might be a good reference table for you because if you do somebody for another state, all right, because our software will do all 50 states.
Yeah, all the tables actually on 1026.
Okay, so 1026 is the table to get you that letter, okay? Now, question 3, did your locality impose a local general sales tax in 2017? What is a local sales tax? What is it here? 4%, right? Okay. And then question 4 says, did you enter 0 on line 2 above? Nope. Okay. So it says then we skip to line 6. Did you enter 0 on line 2 above? Didn't we just ask that? Okay. No, multiply line 2 by line 3. Okay. All right. So that's where we have that. Total of lines 1 through 6. That is our sales tax. Now,
Wait a minute.
got it? Okay. Now, let's look at 8. General sales tax paid on specific items. Motor vehicles. All right. And again, This is where Jean and her Rolls that's parked out in the parking lot that was $128,000. She can add that to her general sales tax. And what was the sales tax on that Rolls Royce, Jean? About 5,100? Yep, okay. All right. The other one is, this is Mary Ann's down at the bottom. Number 10 is the shoebox line. Okay? Sales tax using actual receipts. So if they bring in actual receipts and you have to add them all up.
But you only do the state part of the sales tax.
Exactly. Yeah.
It says for homes too, about new home, we multiply 8% times what he paid for his home.
Well, it doesn't say what he paid.
Yeah, it says he paid 95,000.
Yeah, but it didn't say he paid tax on it. So, all right. Okay, so we have that in there. All right, so that's sales tax. Let's go back to Schedule A. So find the tree on the left and find your SCHA or Schedule A. And we're going to do his 1098A. So taxes he paid. What did he pay in tax? As in property tax.
2352.
No, property tax. Look at your 1098. Look at the bottom of 107. Yeah, look at your little thing at the bottom of 107. Yep, yeah, that's where they usually hide the taxes in there. And the other ones that get me is Wells Fargo hides it as a little paragraph on the back of the sheet. Everything that's paid out of the escrow. Doesn't show up on the 1098. For some reason, they've chosen this little paragraph that itemizes the escrow disbursements. It's there. I don't know why, but that's where they'd hide it. So, real estate taxes on my principal residence, 2319. Okay. All right. And then what else does he have? And that he's got mortgage interest. So we're going to go down to interest paid. All right. And if you look on line 10, about the fourth item down says home mortgage interest and points from Form 1098. Okay. What did he have? Did he have points? So I'm going to hit F5. Light up my box at F5. My little calculator is going to come up. 4378, 65, and $1,900 in points. Okay. So what's that number? Anybody got it? Is that better? 6279.
Isn't line 12 for points?
What's that?
Isn't line 12 for points?
Points not reported on Form 1098. The one we put it on says home mortgage interest and points from a Form 1098. So, and again, the lines on this, when you look at it, when it prints on the return and when it goes in electronically, there's just too much clutter here. Okay. We have, what else do we have there? If we go down to line 13, what's in box 5 on the 1098? Mortgage insurance premiums. So 356.30. Okay. All right. So put it on line 13.
Can I just put my figure in, or do I have to?
No, you just put the figure right in.
Okay.
All right. So what's everybody got?
What?
Well, does he owe money? Does he get money? Okay. All right, and I didn't get what the answer key got. Interesting.
So use your, go all the way to the bottom, the 15,080
Where's that?
at the bottom of your schedule.
15,120.
You have 15,120 at 15,80.
Okay. So what do you have an extra in there? You put that New York State disability, you double dipped.
Yeah, the 3120 in there.
It's in there twice. Did you put that on So go back up to your taxes paid. Tim, what do you have in your taxes paid?
Total 4671.
Okay. All right. What do you have? Go down through your Schedule A.
6635 under interest.
What do you have on line 4 for your medical?
3366.
Okay, so what are we missing on the medical? So go to your A detail. Okay, Gene, how'd you do on this one?
Terrible.
As far as what?
I can't ever get anything entered.
Okay, like what parts?
A stupid thing with a calculator.
Well, just line up the square and hit F5,
I added everything up.
hit the number, hit plus, and then hit enter, and it puts it right in.
I'm trying to hit equals.
Yeah,
Okay.
don't hit equals, just hit enter when you get done,
That's what I said.
because it enters it into the square. How's your medical look, Jim?
That's good. 7213 is the total.
What do you got up there, minus 354 and?
Yes.
You know what? That's pretty easy. That's pretty good. They stuck church donations in there.
Oh, okay, yep, so we need to take that out, because that's gonna mess it up, because that's subject to, yep. Okay, so get those out of there. There you go, where it says United Way for cash contributions, there you go. Yeah, because otherwise you have your contributions subject to the 7.5.
No, you have to put something up.
There you go. Did you get 73?
4374.
Food and 171 back.
Keep going down a little farther. Okay, so go to your Schedule A now. Very bottom. Look at the 15120.
I know.
Oh, do it this way.
I did.
Keep going up there a little farther. Okay, so let's go through Schedule A. See where our numbers are off. All right, so what do you have on line 4 now?
421.
Okay. Taxes paid, 4671. All right.
6635
Yep. Charity.
and 3393.
Okay, we still got something extra in our charity there. So check those numbers there. You got the United Way and the church and the miscellaneous. You got that all in there?
Church.
Oh, the mileage. You went too many miles. 10.
Oh, yes.
Put the 490 in there for the miscellaneous. There you go. There you go. Perfect. Now you're on.
You don't want to go into the state, and if you're not getting a refund from federal, but you are at the state, ask it.
You check the next one and actually put it in a different account. Kind of quirky.
Okay.
Put a different account, and then it'll ask you to fill all the information out. All right.
We don't.
Okay, close that out.
We did.
All right. Okay. All right, Gene. So put 4378 in. You can just use your 10 key. Okay, hit F5 first.
Wait a minute, I thought you just did it and added it up.
Yep. So get your F5. So get your calculator up. Not in there. You gotta hit F5.
We tried this.
Okay, just let me do it, okay, Jeff? All right. So F5. All right. Now just using your numbers. You use your 10 key. Use the calculator. So do plus.
If you've got a calculator, how come you can't use it?
With the plus, there you go, okay, all right. Then enter, there it goes. Okay, that's your calculator, it's just like the keys are calculator. If you start doing this, the coding on there,
Gotcha.
you know, you hit that equals, it's just gonna leave it on the calculator and won't carry over.
Oh, okay.
All right, so yeah, so don't use the mouse on the little calculator keyboard. All right. So we got
What about the penalty?
350, what penalty?
Didn't have healthcare.
Yeah,
Where'd the penalty go?
it's on there. That's why he owes money.
Oh.
Okay.
No, no, the federal mistake.
So if I go to 1040 page 2,
Okay. This one?
all right, look at line 61. What's his penalty? 1,022.
What line?
61. All right, 1,022.
1,022.
Okay.
What are you on?
Well, she was asking about the healthcare responsibility. 1040 page 2.
Remember when he said that he didn't have any healthcare?
Yes.
Yeah.
Yep, line 61. Mm-hmm. Okay. All right. And what did you have for your numbers, Gene, up in the blue box?
354 and 171.
Perfect. Okay. Yep, he owes 354.
But now that I've screwed around with all this so long, I have no idea what I did. So the next time I go to do anything like this, I'm gonna be totally.
No, you'll be all right. We'll do plenty more of these because we're going to be doing a lot of itemized from now on. And that was with the forms and stuff. Okay. All right. Okay. Now, one quick thing, we talked about that. The other thing is, well, we'll talk about that next time. All right. So homework. Quiz for chapter 10. Problems, the remaining problems for 10. And read 11. Okay. All right. Okay. And next time, we're probably going to spend about half the class interviewing each other. All right, each time, the morning and the evening. Okay? Because I want to get you ready for the midterm. I already gave you the answers. What more can I do? Okay?
Bring in donuts.
What's that?
Bring in donuts.
You know, Gene, I apologize. I had one of those cinnamon rolls for you. All right? It didn't make it through the day at the corporate office. I had a bunch of hungry movers and I had it in the kitchen and it disappeared. So, all right. I guess I learned that when people are moving and a big cinnamon roll in there, it's fair game. So, yeah, I had it yesterday for you because my wife was in Canandaigua. Sweet Solutions, Main Street in Canandaigua, if you're ever out that way. Yep. What it looks like, you ever seen them when they pack basketballs and they deflate them and kind of fold them inside themselves and they look like a dome? It's about the size of the cinnamon roll. It's about the size. What's that? I know. But I think, Janet, you're diabetic, right? Yeah, the frosting on it, you would have been in a coma, honest.
I think about it all the time.
Yeah, well, this frosting, I tell you what,
It has to be gluten-free though, that's all. Specialty bakeries only.
See,
I have cost, so I think I can write it off. Huh?
Give me an
Write off
learning
my
participation.
Yeah, you have gluten-free frosting.
Have a nice weekend, guys.
all right, we'll see you later.
Ready for the snow.
Powdered sugar, butter, and milk usually. That's all.
So you can
I like to make it from scratch. I don't like to buy it. Because they have a lot.
That's why she likes frosting, she just eats the frosting.
I don't even like the frosting.
Okay, there you go, Gene. See the plate there with the hands? That's the size of the cinnamon rolls. If you look there, there's a plate and there's 2 hands on that cinnamon roll.
And you didn't bring it in for.
I've been
I
asking.
showed
That's what they look like.
Yeah, we get so full.
Did I? Okay.
They're called fun size.
Were they Spanish from Spain?
No.
30 years.
And